Hey everyone! Hope you had a good weekend. We've got a full week to unpack and a Monday open that just got a lot more interesting. Let's start with the big picture. This week was not about bad news. It was about structure. The Mag7 lost roughly $3 trillion in market cap in June alone. The Nasdaq dropped 4.6%, its first breach of the 50-day moving average since April. Meanwhile, the Dow gained 0.6%. 11 sectors, 8 of them positive for the week, and the S&P still finished down 2%. That math only works one way. The biggest names are dragging everything else down. PCE came in at 3.4% core, the highest since October 2023. But the bond market didn't panic. The 10-year yield actually fell 8 basis points to 4.375%. Why? Because oil collapsed. WTI dropped below 70 for the first time since the Iran conflict began. That pulled down inflation expectations across the curve. The market pushed its rate hike timeline from October to December. If you're new here, subscribe. The pinned comment has the full watch list. Now let's look at where we actually stand across 5 key references. Start with QQQ. QQQ closed the week at 706. The short-term trend line is at 721. Price is below it. That's a breakdown. The daily chart shows a clean 5.6% decline from the June 17th high of 744. And here's the part that matters. Friday, the QQQ bounced to 726, touched the trend line from below and got rejected. Closed back at 706. That's textbook retest and fail. Next level down, 690. The prior consolidation zone from mid-June. Now VIX. This is where it gets interesting. VIX closed at 18.4. That is not a panic number. But here's the divergence. The QQQ is only about 5% off its all-time high, yet its implied volatility is trading at levels we saw during the initial Iran shock in March. The VIX itself is low. The options market is pricing in something worse. That disconnect is worth watching. UTI crude closed the week at 69.3. That's below all 3 trend lines. Short term at 81, mid at 82, long at 95. Complete trend breakdown. Then Saturday happened. The U.S. struck Iranian targets again in response to an oil tanker attack. WTI futures will open Sunday night with a gap, likely $4 to $5 higher. The oil collapse that helped drive yields lower? That thesis is now being tested in real time. A note on the intermediate outlook. The bull case this week was built on 2 pillars: lower oil, lower rates. Over the weekend, one of them just cracked. Let's move to the 2 individual names. CAT first. CAT closed at 997. Its short-term trend line is at 997.90. They are essentially the same number. That is a line in the sand level. Thursday, CAT hit an all-time high at 1,057. Friday, it opened at 1,031 and sold off all day. A bearish engulfing candle that closed right on the trend line. The 1-hour chart shows no bounce, no buyers stepping in, no reversal pattern. The setup here is binary. Hold 997, and you could see a bounce to 1,007. Lose it, and the next stop is 970, where it bounced in mid-June. The trend is still intact. 3 lines, all bullish. But the short-term picture needs a defense. MU, Micron, the earnings story of the year. Revenue plus 346%. The Q4 guide 20% above consensus. 16 new long-term agreements locked. The stock gap to 1,235 on Thursday. By Friday's close, it was at 1,132. That's an 8% giveback in 2 days. The short-term trend line is at 1,132. Friday's close landed exactly on it. The 1-hour chart shows a small bounce in the last few candles, dojis, and a flicker from 122. That's not a buy signal, but it is the first sign of stabilization. If MU holds 1,132 on Monday, a bounce to 1,180-1,200 is the path of least resistance. If it loses 1,132, the gap fill at 1,100 comes into play. Quick note on sequencing. The weekend escalation adds a layer of complexity that wasn't there Friday afternoon. Higher oil puts pressure on airlines, transport, and consumer discretionary. It also pushes the yield narrative in the opposite direction. If oil gaps to 74 or above, the bond market reprices, and that rate cut hope trade takes a hit. Before I wrap, drop a comment. Oil gap up or Mag7 continued weakness? Which risk are you watching closest? Here's the bottom line. The macro setup coming into this week had a clear narrative. Oil down, rates down, rotation on. Over the weekend, oil went back up. That doesn't break the thesis, but it does complicate it. The levels that matter for Monday are KT at 997, MU at 1,132, and QQQ at 706. Hold those, and the week starts neutral. Break them and the bias shifts. Subscribe if this helped. Watchlist link in the description. Good luck this week.